This is the briefing for Friday, July 8th. The stock indices appeared to be selling off early this morning, and you can see here that we opened up a little bit higher, and then of course it started to sell off, and then buyers came in and drove the market higher, this being the spiders, this being the Qs, and you can see the same thing that happened in the Qs representing the NASDAQ, that buyers came in as it appeared that we were going to get a pretty significant sell-off this morning. In the second hour of trading, buyers actually stepped in and drove it back up. So we closed near the highs of yesterday, and those highs are really at short-term resistance, because you can see going all the way back to June 27th, this high here, that we're testing that high right now that comes in right around the 391 area in the spiders and the 296 area in the Qs. So the other thing that was happening was I think it was on the 7th, which was yesterday. We had a pretty strong day in terms of price development. You can see that opened higher and then continued to drive higher into the close yesterday. The most significant thing about that was the fact that we had a pretty significant divergence in market breadth going into yesterday's trading, and that it was eliminated yesterday, with breadth just expanding and expanding pretty dramatically. So yesterday was a strong day overall in terms of the market as a whole, but it was not a strong day in terms of volume, and I'll get to that in a few minutes. So looking at where we are now, we are at short-term resistance, so it's going to be interesting and important to find out whether we trade above this. You can see the pause that we had today basically right at resistance. Same thing in the NASDAQ, traded a little bit above it, and it really did appear that we were going to see some type of sell-off today based on the retracement of that initial hourly candle this morning. So looking at where we are in a little bit longer term picture, and I pointed this out earlier this week, that we had this divergence in volume. This is volume in the spiders. That happens to be the spiders, and you can see volume diverged going into that low. But then as we had this rotation up, volume continued to fall off until we got this breakout move that was a very impulsive move, and you can see that by the gaps that occurred, and volume increased coming into this low. We had a slight divergence again, and now we have this rotation up, and volume is collapsing once again. Now this is volume in the spiders. It's not total volume, which I'll get to shortly. Now we did have a slight new high over yesterday's high, and therefore we have another divergence in market breadth. So the market was not as strong as it was in yesterday's trading. And volume is just very concerning to me right now. I'm just struggling with buying this market, because we know that chart patterns repeat themselves, and this certainly is something significant with this rally, and buyers or volume falling off pretty dramatically. In fact, volume is even lower now than it was back at this time here. So the other thing that I did at yesterday's briefing was, we know that a lot of times we have different types of characteristics for counter trend rotation. Sometimes we get a move and then a pause, sometimes it's just a pause, and sometimes we get a three-step counter trend move where there's equality between legs 1 and 3. So this appears to be developing as a three-step potential counter trend rotation, where leg 1 potentially could equal leg 3, and that comes in at the 403.50 level, which is fairly close to the next important level of resistance, longer term, I should say intermediate term, right around 410. Now, based on what I see in volume, I think the spiders are going to struggle to make it that high. And it's not 100% probability that you're going to see equality between legs 1 and 3, but a lot of times it does happen. If the spiders were a little bit stronger, I think it would have the potential to reach that 403.50 area. But significantly, if it doesn't, and in fact, if we see a turn down next week, then this level right through here, right around the 372.50 area, is going to be important support, because if that's broken, that's going to eliminate the three-step process, or say that it's complete. And if that's broken, that 372 area, then that's going to open up a test of this low from June 17th. Now, looking at where the NASDAQ is, or the Qs, you can see the same thing basically happened. We had this rotation up, volume fell off, then we had this thrust down. Now we've got this three-step potential counter trend rotation, volume falling off and absolutely collapsing. This is volume in the Qs, I should say. Now, the three-step counter trend move, where equality of leg 1 to leg 3 comes in at 303 in the Qs, so that's really not that far away. So 295.22 was the close for today. And of course, the next level of resistance where that equality would come in would be around the 303 level. Now, I should reiterate once again that it is an area. It doesn't necessarily have to be the exact point. Above that is intermediate resistance at 320. That's really important. Now, you can see what's happening here with the rotation that's occurring. So 320 would be a significant resistance area in the Qs. Once again, we had a slight new high. NASDAQ breadth was weaker today. This is really not a significant divergence in breadth like we've seen in the past, but certainly, we have to make note of it. What's really interesting is what's happening with volume. Volume even in the spiders and the Qs. Same thing is occurring in the Russell. Equality is at 182. Above that is important resistance at 190. So I listed these areas here, these equality areas, mainly for my own benefit. I'm going to just keep an eye on them. I really would be surprised to see the spiders make it that high. The Qs, I would expect, potentially can make it that high, potentially on Monday, and possibly even the Russell, but that's yet to be seen. But where we are in terms of volume, you can see what's even happening here. This is total volume on the NYSE and how it has collapsed. This is total volume on the NASDAQ, how it is and has collapsed as well. So really, this rally is not attracting new buyers. In fact, new buyers are waning, and it's just a matter of time before sellers start to come in. Now, should that change on any higher high above today's high and volume begin to increase, then that would be a significant event. But unless or until that occurs, I'm just very, very risk averse to the long side of this market right now, because we could see another pretty significant move like this with long range bars, gaps, and long range bars again. So that's pretty significant right now. Volume is just really, really critical to the analysis. Now, looking at where we are in terms of overbought and oversold, we are basically neutral. But once again, and I pointed this out, I think I pointed this out on Tuesday in Tuesday's briefing, that we were neither overbought nor oversold, but the indicator had converged, and it has converged once again in neutral territory. Same thing with the NASDAQ. When that happens, it suggests a tightening in the market, and typically there's a breakaway. Now, this tightening led to yesterday's breakaway and strong breadth readings, which brought us up to a point of being overbought. And the same thing happened in the NASDAQ. So now we've got another tightening again, so it's going to be very interesting to see what happens on Monday. Important to this is that if we do trade higher on Monday, and I pointed this out in last night's briefing, if we trade higher on Monday, then you want to see breadth stronger than it was in today's trading. If it's not, then you're going to see a rotation back through the range, which is exactly what happened in today's trading. We opened higher. There was a divergence in breadth. You can see that looking down at the breadth indication right there. And then we had a complete retracement back through the range until buyers stepped in the third hour of trading and basically saved the market, I think, from selling off pretty significantly. So watch for a breadth divergence on a higher high, but short-term resistance, we're right there if we trade much above it, and breadth is strengthening. Certainly on a day basis, you want to consider being long the indices, and then of course just follow with good stop management. Have a great weekend. I'll pick this back up again on Monday.